Yeah, so with the bots, so it's all under trading. Oh wait, can you guys hear me? Yeah. Okay. So under trading analysis, there's the different flow bots. So you got the Smart Tracker, Golden Flow, Unusual Flow, Sweet Flow, and those are the four. Um, those are the four flow. So what it does is that it uses AI. It pulls it from a third party company, the information, and then it just pretty much presents it into a good looking like visual view. And what it is it so it's sorted in different categories because anything that is under Golden Flow, it's considered high ranked option orders that are $1 million or more. Those are the ones that if you were to follow one channel, if you were to follow one channel compared to the other, what, one, two, three, four, I would do the Golden Flow because there's a high probability that the high probability of that transaction going in the money by that expiration date. It's just you. It's like following the big wolves on Wall Street where they're spending their money. That's exactly what you're doing with the Golden Flow. Um,
One more time, Golden Flow
Perfect.
tracks all the big trades,
Golden,
right? The multi-million
you
dollar
got it.
trades. Okay.
Multi-million-dollar trades. You got it. And then the unusual flow, those are triggered by large option orders. They're triggered by transactions of option orders that are unusual, meaning that the parameters are I believe the parameters are um if their open interest, I'm sorry, if their daily volume is greater than their open interest. And do you know what those are? Like the open interest is the open contracts, and then volume is just the number of contracts that were open that day. And the volume, typically, the open interest is always greater than the volume, typically, unless for some reason that day there was a high activity for that particular stock, and that's where you kind of want to you kind of want to look towards that to see what's really moving that stock along and why people are going into that stock today. One thing I like doing with the unusual flow is that honestly, there's a lot of noise because there's so many posts that go through that. One thing I would look at is the rank. So it's ranked from 1 to 100, and anything that's greater than 100 is I don't know what it is, but the AI ranks it based on like multiple factors. The higher the rank, the higher the probability is. But one thing also is instead of following blindly on just the rank, for the unusual flow channel, there's the Finviz chart for that particular stock. I would highly recommend quickly going through each one of those just to see if that setup is appropriate for your style. So, for instance, like let's say you look at the Neo. Neo had a rank of 82. Um, you pull up the Finviz, and it looks like it's gonna break through or something. And that's probably why the AI is providing a higher rank on that and thinking that that particular play has a high probability of hitting that strike.
What's the open interest?
Open interest is for this particular stock.
No, just in general.
So, like the definition of open interest?
Yeah.
Open interest is the number of open contracts.
Okay, gotcha.
So one thing is like on
And that's usually more than the daily volume.
for the most part, unless something like a catalyst triggered a lot of demand for that particular stock, then the daily volume can be greater than the open interest because there's increased interest. So
Gotcha.
what the unusual flow does is that it pulls the um what the unusual flow does is that it looks at so these particular transactions they exceed the open interest. So there's interest in these particular companies. So like Neo, I think someone mentioned Neo this morning, Elf, Ally. These are all companies that you could look at for potential plays.
Okay.
Um, you have any more questions in regards to that? So okay, so sorry. So sweep flow are transactions that are sweep flows are transactions where the trader is looking to enter into that position as fast as possible. So they break it into multiple parts. So like let's say instead of buying one huge order of 100 contracts, for instance, not one trader has not one trader typically has I'm sorry, not one seller typically has 100 contracts in one go. So what they do is they put in multiple buy orders of smaller amounts to have it filled as soon as possible. And so sweep flows are transactions that are also highly unusual, but then they are signaling that there is buyer signaling that buyers want to get into the positions as soon as possible. And then below each of these signals, they also have like this says either highly unusual or very active or new top. So if you were to let's say look at the NEM signal, NEM, let's see if I can pull this up on let's see why they're getting triggered. All right, can you guys okay, can you guys see that? Okay, let's go to NEM. Let's see why it's getting triggered. I'm on Webull. Pumped on the what did that thing say? Angel 62. It's any 62 is sorry 62 is close to in the money. They think that it's going to go up. Okay, I see. It wasn't NE, it was NEM. So what time did they buy that? They bought that in at right before close. There's probably huge momentum pushing it up, and that's why they were probably thinking that's going to hit 62 overnight or something. I mean, this would have been an easy one because although their ranking is only 41, 62 is just what like 88 cents hitting the strike. They paid 30, so they $30, so they need to hit 62.30 in order to break even. So yeah, I mean the high overnight was 62.81, so this would have been in the money if it moved overnight. Although the ranking is small, although the ranking is low, there's a good probability that this will in the money potentially tomorrow or by expiration, which was 7 to actually no, it had to be by tomorrow. So this was kind of like a lotto move, in my opinion, because there's not enough time. They would get clapped by Theta. That's why they bought it right before close to limit the impact of Theta, time decay. So imagine like if they would have bought it like around noon when there was actually large bullish candles, they would have bought it at noon. They would have lost an hour on time decay already. So it could be a disadvantage for them to enter in that time. So they entered it at 12. Was it 12:56? And then let's see. The smart tracker just identifies trends. So this is like more of like a long term thing. So if you were to like buy individual stocks or shares, if you were to buy Roku right now, it's if you hit the Finviz chart, it shows that for Roku. So let me see where I went. Yeah, so right here, Smart Tracker just it uses AI to identify certain trends. And once you click that, it shows this, and then you can kind of visually see that, oh look, it is in a trend. Now it's an uptrend. So right here in this area, that's when the market pretty much dropped, bottomed, and since then it's gone up. It's peaked and it's gone down, but then it's in a ascending triangle, and so there could be a potential for a either a gap down or gap up based on this chart. That's something you can take a look at. And these are just additional potential plays to look at. Another one actually another one I pushed into the server yesterday was Swing Trade Bot. It uses yeah, and so for those fin visiting, it also has the EMA and moving averages as well too. So it uses other indicators. It sees something that you should take a look at. Then Swing Trade Bot is a Twitter feed that gets pushed into here of potential plays as well too. And they break it down into certain categories, and they use AI to find those picks as well too. Most of the time, I see that the Twitters updates towards after the end of the day. I think what it does is they use the information from that day to produce their scan results. What else? I think we're all set with option order flow bots, unless you guys have any more questions.
It's really cool because like he showed you, you could just click on the link below each thing and get the chart pulled up, the FinViz chart. So it's kind of
Yeah,
like
and it only works on the unusual flow, Golden Flow, and Smart Tracker. It's very helpful, honestly, picking through them just to see if you see something there too.
because it
'Cause,
basically charts it for you, so you don't have to do anything. You just have to take a look at it and be like, oh, this looks like it's about to break out, or oh, this looks like it's going to go down.
it's a kind of confirmation there. That way, you're not going in blind. And it's very helpful because these transactions are very time sensitive. It's very helpful to just go peek through those to see if there's any ways that you want to do it too. A lot of people, some people don't use this at all. Some people just use the chat. Chat comes up with some good ideas as well too. But this just provides you more opportunities to see if you can jump into these additional plays. Let's say it's like a slow day, for instance, like a slow day. There's not very much going. These bots are still pushing orders through. They're seeing something that you aren't seeing. Yeah, it's cool. Let's see what else. So we're gonna talk about premium breakdowns. So are you guys familiar with how premiums are made up? So you have like intrinsic value and extrinsic value. So intrinsic value is affected by MDK, so theta. No, sorry. Intrinsic value is the stock price's underlying value. So let's say Tesla has like Tesla is trading at what 1150 or something like that. Their premium of in the money is going to be 11.5, and then you have to add the extrinsic value. Extrinsic values are variables that affect it theoretically. So like time decay, supply and demand. Those are the two most common ones: time decay, supply and demand. Delta, I don't think delta is incorporated in the premium, but I could be wrong. I just use delta as a um, as a indicator of probability of the stock being in the money, and that's kind of what the definition of delta is. And so I was doing some research in regards to why you lose more on premium if the contract is on the money, in the money, um, and the stock goes the opposite direction. And the question with that is that do they have the same expiration date?
They probably do have the same expiration date.
So I was reading. See if I can.
So
I don't actually know why, because I don't deal with a lot of the money contracts. But I did look into this a little bit.
so
and
it was just like a clarification. Are you saying like once an in the money contract like goes under and other money contract goes under too? Like why does the in the money lose more premium faster, pretty much?
and are we talking about calls or puts? Because theta affects calls and puts differently.
That too.
Theta, like there's an advantage to theta when you're shorting a stock. Why does it be faster despite data?
That would just be because everybody's selling out of the contracts a lot faster than the ones in the money if they don't really hold value themselves theoretically.
Also,
Out
you
of
also have to understand that theta is just
Oh,
theoretical. It's
wait.
it's like you can't one theta will affect contracts differently, and there's not a set calculation for it. That's what I read from that Google article that I just sent there.
Let me try and answer this question because I think I'm reading it and I think I'm comprehending it. So out of the money, lose more money faster than in the money contracts despite the delta and theta. Okay. So out of the money contracts probably lose more money faster because if the stock is not moving towards your strike price, it's going to lose value because you're feeling that theta burn at that point, like whether it's like minutes, hours, days. Whereas if you're in the money or close to being in the money, you're already there. So the stock doesn't have to move as much to get there. So you're not really feeling that burn as much. It's probably, or I would say it's definitely like a mathematical thing or something. But that would be my assumption as to why. If that
So
makes
like if you're looking to do like lower risk, you have a lower risk tolerance, you may favor in the money contracts versus out of the money for sure. Out of the money contracts are definitely higher risk because based on the expiration, depending on the expiration date, if it's a short-term expiration date, there's other factors that can play against you, such as like you don't know when let's say you're shorting a stock and you don't know if the company has a merger all of a sudden. Those are factors that could affect your probability of being in the money by the expiration. So that's why it's a higher risk because there's unknown variables. The higher the theta.
Is OTM on the money?
Yeah. Oh, out of the money. Out of the money.
Out of the money. Okay.
Yeah. What
Out of the money.
do we have tonight, though? If you guys want to type them up or speak out.
It's actually a good question because like I'm reading the chat right now, so it's probability of being in the money a big component of option prices. So from depends because it does affect the implied volatility. So if yeah, IV implied volatility. Implied volatility is the supply and demand though. Like if the higher the IV, the higher the demand is, the higher that traders think that the stock is going to fluctuate more drastically. So being in the money, a big component of it could be it could be, but like the thing is like what I've seen with like Tesla, for instance, because the implied volatility is so high and traders expect such a large fluctuation in price that you can actually catch premium. So let's say you buy and for instance, like when SPY dropped tremendously back in March, a lot of people bought far out of the money contracts with expirations that are like semi close, semi far in the distance, and they still made money by the premium change. So theoretically, you don't need if the implied volatility is high, theoretically don't need the option contract to be in the money to make money. You can just ride that momentum. You have to be selective on the strike price because you can't just say the S&P is trading at 350 and you buy a out of the money contract with a strike of like 100, dude, that's like, and it expires in like 3 weeks or so. That's just unrealistic. But
A lotto.
So
people
would
do that. It is a super lotto, but I just think it's irresponsible.
you're basically gambling at that point.
Yeah. That's also kind of like my thought on Tesla. Also, I don't play Tesla. I've never played Tesla just because I feel like it's like such a gamble. But uh, Matrix and both Pokey, they both have played Tesla, I believe, and they've won on it. So
Poke's slaying
my
Tesla right now.
yeah, is
haven't played it in a
Tesla's his
while,
moneymaker.
Tesla is a make or break for an account. You either
It's
make it
mostly a
big or you
breaker.
blow up your account.
It's mostly a breaker, but sometimes you win.
So when starting with a smaller capital, you essentially play OTM options and make money off the premiums because they're cheaper
Yeah.
and you don't have to risk as much capital to get into them, so you don't have it. So that's what
Yeah.
I see a lot going on in this server. So I'm wondering if that's usually how you start out.
That's
I'll have
100%
to. It's one
how
way.
it started.
We just favor out of the money contracts because we can see we're playing with probability. That's what it is, and that's where you make the most money. Honestly, is out of the money contracts. And one other thing is like if you are really trying to look for ways to make the most money, so the most bang for the buck, you want to short stocks. That's what you want to do. There's companies that are literally dedicated to short selling. Shorting stocks will give you the biggest return possible compared to buying calls. And that's statistics proves that. So I mean, if you're really looking for the biggest bang for the buck, like I said, what we could do is start like short selling companies, buying puts, finding companies that are like heavily inflated or overvalued, and just short them.
But if you
That's
start
where you can
shorting
make the most money.
stocks, sorry for interrupting.
Good.
Aren't you potentially opening yourself up to unlimited risk on the downside?
No, because
option
you're buying
trading,
puts. You're not actually short selling.
Yeah.
Okay.
We're not actually shorting. We're not actually practicing short selling. We're opening contracts, and what you'll lose, your max loss for put contracts is the premium that you spend. If you short sell with individual stocks, though, you do have unlimited loss potential.
Okay, yeah, that was my question.
So
But
Yatsuba,
if it's
that's not
puts,
true.
okay, I see what you're saying. Different. It's
Yeah.
just like a call, but the other way, except you can only lose your premium, worst case scenario.
You got it. You got it. Same with calls, though. Same with calls. The lost stocks just kept going up. So Yatsuba has a good point right now. Right now, while the Federal Reserve is controlling the market, that is very true. But last year, when I play a lot of earnings, last year I had no problem shorting stocks, even though it was in at an all-time high. There's still companies that are like not doing as well. For instance, like last October, I shorted. I
Boeing.
bought put contracts. Boeing, yeah, that was a good one too. There was multiple opportunities for Boeing actually because the first news broke out. You probably missed that opportunity, but there was another crash, and you could have jumped in on that too.
Boeing was literally terrifying. They went from 400 to 100. Like,
Yeah.
like what? Like that's crazy.
Back in like March, I was telling literally everyone to buy Boeing. Boeing is so heavily connected with the national security because of their contract, and they are the number one producer of aircrafts, of which eventually come back. No one will like. You can't say that the aerospace or the commercial air travel is ever gonna go back down. Even though it's like tumbled a little bit because of the virus, travel has stopped. It'll always go back up. So long term, yes, airlines will also go back up too. But because airlines are so competitive, in my opinion, you really have to like pick in like the big guys. Like I like Delta, like American Airlines also good, and I like Southwest.
Dallas safe. AL was fun.
United?
United is good.
United is good too.
So those are the
They have
three.
they have a huge fleet. I go for the large fleet ones, and I would also go for the ones that have the most destinations. You're
Right
talking
now-
about Delta, United, American.
Delta is only running 60% right now, while the other airlines are going 100 capacity. So,
Also, I would highly recommend if you really wanted to get into airlines, take a look at companies that have the best business rewards. Because no matter what, business clients will continue to fly. They need to continue business. So the ones with the best, most lucrative program is where I would go, because consumer spending, that's kind of like iffy now because of the virus and like where we are in the economy. But business clients will always continue to go up unless that business can be remote.
But
Whatever. Profit is profit. That's true. Better to be positive than negative. There's a lot of missed opportunities. The longer you trade, the more you realize that there's so many opportunities out there that you could have missed. Like I missed Square today. I was hungover as fuck, but
Everybody did.
yeah, I think
$4 rip from the open. That was crazy. To $11 rip at the close, which is even crazier.
Jesus.
Like, it's like, oh yeah, all-time high times 10. Like, fuck. That's brutal.
So with this stock bot, is there a way I could just bring up the last 15 minutes of movement on it? I'm looking through these commands. And there's a lot. So like just so I could see a chart on it where it'll give me the price where it's at right now and what it's been doing for the last, I don't know, so many minutes.
Maybe.
I think it's
Kind of like the Finviz bot, and like a chart exactly like that.
there is. You don't let me see real quick. So
Obviously not as far out, but just for like a quick reference, if people are talking stocks, where I could just pop over here instead of having to bring it up in the app or the website or whatever. Put it in command
you
and pull it up.
go to like the Finviz one.
Pretty sure there's a command. We just have to look for it.
So there is a command for charts to view them. Are you trying to view them 3 minutes or the 15 minutes, right?
Yeah, just okay, I see it now.
So this
Exclamation
one's
point
gonna be your-
C15M.
Oh, you got it.
Cool.
Got it. That's
That's what I've been looking for because that's super helpful.
One thing you might actually like better, because that was a lot. What the last 1, 2, 3, 4, 5 days last week. Price C5. It's a 5 minute. That gives you the intraday. Are you looking for the intraday, or are you looking for a multi-day chart? C5.
The use of
give you
both
the
would be
5
good.
Okay, so those two are gonna probably be the best one for you. But it doesn't. The issue is these charts don't give you the EMA. It doesn't actually chart it for you like that. How the other one is. Although this is being pulled by Finviz also,
Okay.
and that's a issue with the developer. So there's these bots are produced by two different developers. You use Thinkorswim.
Yeah, I have Thinkorswim.
Do you find yourself using trading with Fibonacci's retracement a lot?
I'm just getting into it, so I haven't figured that out quite yet.
Because under resources, if you can see that, there's the Google Drive that I incorporated of Thinkorswim indicators. And one of them is an auto Fibonacci study. So you just put it in there. You install the script, and then you literally just click the study, and then it'll chart up the Fibonacci retracement for you automatically. The only thing is, if I'll try to find something that can auto chart like all that for you, like EMA. What you could do is create a custom study file. That's what I do. Then it'll just pull up all those information for you. That way, when you type in a ticker, it'll just automatically chart that for you.
Okay. And then
Thinkorswim, and you can do it
Fibonacci,
on mobile too.
that's just measuring where the support is for that stock and where the resistance is going to be?
Potentially.
Okay.
Potentially.
Where it's projected.
A Fibonacci retracement doesn't always work.
Well, it's like between that and like your EMAs, so you're looking for marginal volume gaps of pricing. So like once it breaks certain supports, obviously it will like either region above the support or go under, right? As we've seen.
Uh-huh.
And that has to deal with the volume itself. So like depending on the RSI, we went over this last week, but when there's this thing called the RSI, which is like the relative strength index. This relative strength index is if it's below 30, that means the stock is undersold, and if it's above 70, that means the stock is oversold, right? So what the Fibonacci's has to relate with the volume is that when certain metrics of the stock gains rapidly to a certain area, the volume will also equate to a max capacity. So it has to drop back down within a marginal growth of where the Fibonacci's and your EMAs would be to continuously gain in price, because what happens in the stock market essentially is that as pricing is increasing, the average price of the total shares move forward or downward, right? So the average with the volume itself has to equate this measurement. So that's kind of in turn where the Fibonacci's come in play, because as depending on how rapid things gain in price will also decay the same way due to the nature of volume, because people bought in and sold out at those exact moments typically. It's not always like perfect, right? But it does help out when things like go extraordinarily high. Does that make sense a little bit?
Yeah, it does. Thank you for explaining that.
Yeah, so like the key kind of questions like exit and entry points, right? So like let's say you're above 70 and your RSI is like 80 or 90. Anything above 80 is kind of really dangerous-ish, and then 90 is just way too bullish. Does that make sense? So if your volume starts dropping in turn, you should have probably gotten out of the contract, vice versa. So
Okay.
yeah. So it helps measure like overall how the stock will swing in pricing too. Because what you'll see first before movement and pricing is volume will move, and then the pricing will adjust. Just because the market takes a second to accord for the sell and the buy of the contracts or the shares themselves. Yeah. For tomorrow, I'm still in Apple. I'm kind of dug myself a hole. We still have a week on that, so I'm not too worried. Market looks pretty bullish. It's 4th of July weekend. I don't really know what's going to happen next week. Hopefully they don't shut everything down. There's news of like Vegas and stuff. Still in Netflix. That turned well. In Tesla because I'm crazy. And yeah, that's pretty much it. Realistically, I don't like airlines right now at all. I think casinos should be a complete put. But
what's your strike on Apple?
it was like is it 385? Yeah, I think it's 385. It's kind of
I
shit.
mean, it actually 385, and you got till expiration next week. I mean, you actually might hit it.
See, like it's if you really look at the graph, pull back, like everybody's really scared, but they're at highs. They're only like 12, 13 points from all-time high.
So would that contract be considered out of the money?
Yes.
Yes.
Yeah. OTM.
Out of money would be considered, well, depending on how big the stock cap or stock share itself, anything probably above 20 points or 30 points. I mean, anything above 10 points is already difficult as hell in a day. So kind of go from there.
I actually think your 385 just needs a little bit more time.
Yeah.
If you view the weekly chart, it looks like the end of this week very bullish. There's a huge bullish candle, but I don't think you have enough time.
Yeah.
Consolidating now though. You just need to break like 365. There's so much downside potential. All right, guys. Any more great questions? Yasuba mentioned that missed Square and Netflix and Roku. If these are stocks or companies that you guys are very interested in, I highly recommend creating a watch list, an active watch list, for plays. Like, well, I have a watch list just for biopharmaceutical companies, just because biopharmaceutical companies are highly hot right now because of the virus. They've just been moving very nicely. So you can, yeah.
Any positions that you guys are looking at, essentially?
I just have a question on your Facebook call, the Strike 298.21. Are we just expecting that all the people that pulled out, that by then it'll be fixed and they're coming back in and it'll drive the stock up even higher to that strike price? Or are we just looking to make money off the premium and eventually sell it?
Just make money on premium and
Question.
sell it.
Okay.
Just to scalp it, pretty much. I mean, like, if it continues running, that's dope. But I had a 250 and that went super well. So I mean, like, Facebook is. Sorry, that's my kid.
You're good, brother.
But
Are you guys down on that Facebook call right now?
Tom, we're pretty much good. Like, Facebook is Facebook.
Are you guys down?
I don't think so.
Well, let me look.
How like it dropped all those like publicity, those companies that literally dumped it on the 25th. It just everyone just bought it back up, dude. The next day or on the 28th.
The following day.
Yeah, the
It says it's
following
down
day.
$10, but
Not bad, dude.
I mean, it's
you would have.
dude. We have until August.
Yeah, you get plenty of time, dude.
no, I know.
People,
Like,
and knowing Facebook, they're gonna change their policy just to abide by the public.
Mhm.
I
think
just have a
about
feeling, dude.
they just did an update on the website.
Oh, they did addressing that issue.
No, they just did like a server, like a whole like. They did
Interface. Oh, the interfacing. Yeah,
Yeah.
I saw that.
Yeah. I think that they're gonna push some crazy stuff just because they're like, screw it.
Another question is it pretty normal, just something I've noticed, I've only been doing this a short time, but it seems like every morning, everything kind of dumps for about a half hour?
Oh,
Is that people just
yep.
taking profit out
Yep.
from the after hours movement?
Yeah, people who swung positions and whatnot are getting rid of them and taking profits. It's a good time if you see no reason for a stock falling at that time, to buy it. Definitely buy it into the opposite direction. So if it's falling, buy a call.
Okay.
The thing about that is that it's super freaking risky because you don't know if it's like gonna keep going down. There are some my
Whoa.
friends do trade only in that half hour, honestly, because the volatility is so high. You can literally jump in at 6:30, watch the stock tank or pump hella hard, and then be done for the day. So I also like this is like not just a 30-minute thing that you see of high implied volatility. That's always happened. I've been trading for 3 years, and that's always how it is. A lot of option traders actually don't do anything until about 45. So Pacific Standard Time is 6:45. About
Okay.
6:45, that's when people start getting into longer positions for the day, just because the volatility kind of settles a little bit. But from what I've seen lately, is that it's been like 6:30 till about 7:30 or 8 o'clock. That's where the volatility is, and it dies down a little bit, and then the last half hour or the last hour for power hour. Around 12 Pacific time, it's been kind of slow lately since COVID, but what I've been seeing is that around 12:30, 12:45, that's when it really starts coming back. We're either closing the positions or opening new swing positions.
And then options trading ends at 1 o'clock PST, correct?
Correct.
You got it.
Every day. And the stock market closed at 5 for just normal stocks?
No. It
Well,
depends on your brokerage. Because on Thinkorswim, they're trading mostly on NASDAQ, and NASDAQ is all electronic. I can buy individual shares on Thinkorswim 24 hours, 5 days a week that the market is
Okay.
open. can do it anytime I want. The liquidity is a lot lower for when the market is closed, and that's your risk. Is your order not getting filled, in my opinion, or your order not selling, in my opinion. But when I used to play a lot of penny stocks, and do the penny stock will pump super hard at 4 a.m. my time, and I would just sell at that time. But when I was on Robinhood before, Robinhood doesn't have those trading hours. Man, dude, I missed out on lots of money because of that. That's why I'm a big fan of TD Ameritrade.
Okay, yeah, I just switched over there, especially since Follow Pokey and he does a lot of day trade stuff. So Robinhood was limiting me on that. So I'm switching over and getting used to it. It's a little harder to use, but I'm starting to like it.
You got this, man. Just keep it up.
Yeah,
You'll catch
just
on quick.
just power through it. The honestly, the beginning is the worst because you have to like absorb so much knowledge in such a short period of time, and like honestly, it's a wild adventure. But then I'm also a high risk, high reward, so I'm just always gonna lay that out for everybody, um, ahead of time.
Yatsuba, what are you referring to execution of that type? To fast day trade options. Oh man, I can teach you how to fast day trade options on Thinkorswim. Just have to have the right setup, and you can literally like the return button like 10 times if you want 10 contracts, and it feels like hella quick.
You should show that really quick. How do you do a sweep?
Man, I don't. Hold on, I gotta like around with it again. I'll have it for next time because I don't remember what the setup, layout setup is. But in order to execute, to have your transactions fill faster, you have to buy it at ask
Or more. You have to buy it. You have to buy
more.
it
You have
for
to buy it
more
basically at
and lose
market.
money right off the get go.
Yeah,
Yeah, like usually you have
buy
to
at
like,
market. Yeah, buy at market.
and you have to, usually you have to have, so like even though like before market doesn't open, you can kind of calculate premium. So if you know and actually practice a certain strike long enough, you should know the exact premium cost with the adjusted share price. So you can buy strikes into contracts immediately if you know how to fill them.
Straight fast.
Yeah, you should be aware of where the stock is and where you anticipate it's gonna go. That'll definitely help.
It's mostly it's waking up with a game plan. It's like knowing that you want to buy this contract for this much, and if it's more than this, then you're not going to do that at all.
Mm-hmm.
Pretty much, because
Yeah,
that's
and if you know what you want to buy, obviously it's gonna be a little bit quicker. It's just
If you're scrambling to find a strike, you're probably gonna miss out on things, and you're gonna pay a higher premium at that point. So
here's the thing too, is that you're playing against AI guys. So the disadvantage that we have as retail investors is that we're playing against freaking institutional computers. These guys are executing sales way faster than we are. So all we can do is be faster than the other retail traders that are out there.
got a good point.
And that's kind of like my long-term thing. That's the reason why I brought all of these like bots into the server. I think it's a huge advantage because there's just so much information, so many opportunities that we just don't know how. And the reason why we created this community was so that we can tap into multiple opportunities, so that we don't just sit there on our computer all day not doing shit, not making any money.
Yeah.
Yeah, or you can just look for patterns, honestly. Like I'm a big fan of bullish and bearish flag pendants. Those are high potential for breakouts. I'm also a big fan of like triangle. Here, let me post something under the resources that gives you like candlestick patterns. And then you just pick a few that you like, and if that stock fits that particular pattern, play that. That's having a plan, honestly. And,
Well, I can post the video about how to come up with a strategy. Pretty much when you're coming up with a strategy, you just have to practice the same strike long enough to know premium to the certain pricing with how far distance the pricing should be for a certain contract at any given time. And that takes time. I think that just takes a while of watching. I just posted a video in the chat.
So like, I saw
I
that.
thought-
That's good. That's very helpful.
I really like that video a lot. I would recommend everybody just watching it.
So the information that we pull for the bots, the option order flows, I believe they're coming from a company called Flow Algo. Which if you were to look at Flow Algo, FLOWALGO, the thing is so expensive. So we're giving that to you guys for free. Well, part of the membership, but it's at a lot cheaper price. The price for Flow Algo, if you were to get it directly from them, I believe it's like
It's like
100 and
100
something a
bucks.
month.
Yeah.
Month just to access that same information. So if you do monthly, it's $149, $149 a month, which is honestly freaking ridiculous.
Super expensive.
Can you reword that question? I'm kind of confused by reading it.
We're gonna see tomorrow won't be the same as a few days. The strike would be the strike would be the same. The premium would be different though, because theta first, and then also depending on what the underlying stock is moving. If S&P is moving the opposite direction, it'll probably decrease. It'll definitely decrease the premium value.
Pull up how to show premium really quick.
Oh yeah, how to show premium, like the history?
Yeah, just for fun.
Yeah, I got you. Let me pull up my Thinkorswim.
I just think it would be useful.
I can show. So for those who don't know how to premium history on Thinkorswim, I'll show you right now.
So premium history is looking at
Isn't
what
it like that chart of it?
yeah.
So SPY. Let's do SPY since you guys were talking about SPY. That pretty much just moved mini strikes into from in that day. It's because of the implied volatility. Is that what you're referring to?
Okay. Live.
So let's go to this. So let's go back to this. So what you have to do is on Thinkorswim, you go to trade. I bring up this panel. It'll actually be a blank panel like this, and you want pick a stock. We're gonna do S&P. Buy. We're gonna pick a strike. Let's do July 17th expiration with do something far out of the money.
Can we see them?
You guys see me?
Yeah.
Okay.
Let's do something like far out of the money. You said 400, right? That thing's trading for 0. Nobody's buying it. So no, that's stupid. That's not gonna show anything. Let's do this one. So we're gonna do 335. What you're gonna do is, if you have a mouse, I have a MacBook, so I'm just pushing like the right side. You go down to send. That's the contract type. Also, like if you are having issues, if you're looking for a specific strike very fast and you have multiple screens, all you really have to do is type in that information down below. So I'll show you. So let's show this one first. So I'm gonna set it to yellow. It could be any one of these that allows you to, but I'm gonna set it to yellow. And I'm gonna go back to charts, and I'm gonna go back to single. Change this back. And do. So this is supposed to be blank like that.
I don't
Oh,
see
okay.
your screen, CT.
I'm getting like a loading screen.
That's weird. Let me try one more time. Which Windows? Does that work?
There you go. It's working again.
Yeah,
It
I
should
see
be.
it. I see it.
Perfect.
Yep.
Tsuba, are you good? All right, well, we're gonna go to yellow because that's the thing that I sent it to. And this just shows you the history of the premium, where it's gone. And it looks like it's sitting at $19 right now, but it peaked at $27 today at. Or no, not today. This was Tuesday. Yeah, yesterday, right before close. Because there was a spike that day, so let's see if I can the other chart next to it.
Is this like an extension of TOS, like you download it to your desktop, or is this all through the website?
No, this is not through the website. This is the you download it from the website. This is the Thinkorswim program. So it's
Okay.
like it looks like this right here. Can't see it. It's just like a little. It's the actual. So if in order for you to be a fast trader, you do have to have the Thinkorswim program, and there's little tweaks to increase the memory so that it executes, so that things are triggered faster, but it just requires a little bit more memory. So yesterday there was a huge spike. That's why premium went up. Looking at Tuesday, the reason why it went to 27 was the demand was high. Look at that last 15-minute pump and dump. Below. Oh yeah. So if you go to trade, select the premium you want. You go right click, send to one of these categories, colored categories. I did yellow, the chart, which is up here, and this comes blank like this. Blank like that, you just hit the color that you assigned it to. So mine was yellow. I messed up. Let me try this again. And if you're looking to see premiums for the premium history for different strikes, I'll show you how to edit it real quick. I did it to blue now. Blue. Maroon, I'm gonna send it to Maroon. Let's try this one more time.
You got it earlier.
No. What the freak, dude? All right, let me just copy that thing. Another thing you could do is here, hit more infos. If you hit more infos, this is actually, I'm sorry, this is gonna be the fastest way to do it. Hit the strike you want, right click the strike, go to more info, go to TOS chart, and just pick one of these little bubbles, squares. Boom, there you go. And let's say you want to look for a different strike, and edit this. It's at 335. Let's say I want to look at 300. Delete the 335. Do 300. Same expiration though. You can change the expiration if you want using this. But honestly, that shit takes too long. This shows the trend. This also shows a theoretical option price. So if it's above it, there's a higher demand for it. If it's below it, I don't think it actually goes below. Yeah.
Could you pull up shop 1000 really quick for today?
Oh.
For this week?
Which expiration?
This week. I don't
Sweet.
have it. I don't have it anymore. But
Is it 1000?
yeah, I wanted to see what it was this morning. I didn't look at it. When I saw it, it was at 360, I think. You.
Damn. Funny.
That was 200 today? What?
2000, bro.
No, it was. Oh no, at the lowest it was like 6.
Oh, you're talking about. Oh yeah, 200. It was
yeah, it
this
was
was today.
today.
Yeah.
What the
Holy shit, dude, that's a big pop. Look at the after hours too. You know that premium's gonna be probably over 2,500 tomorrow.
Oh, it's gonna be well below.
It's
dude,
already.
That's gonna
That's a nice one.
rip. I saw that at 360. Holy fuck.
That's 1,000% return right there today. Is there a way to compare different strikes and how they move over time quickly?
Writing them down.
You just have to. No, the issue is that's gonna take too long.
Not if you memorize it.
You just have to what you could do is pull up the thing and just send it to multiple charts. So I got one to that already. I'm gonna send that one to there, go back and just send multiple. See if I can copy all of these. Can't copy all of those. You just have to send it multiply, but I mean, honestly, your strike should be dependent on support and resistance lines.
Also, it also should be done by the derivative. You have to be within like barely out of the money to actually make money. What was that?
What you could do is study the freaking company that you want to trade for. What we do here is we trade multiple companies. What you could do is specialize in one company. Support resistant levels of where there is levels where there's resistance. So like resistance going up. The price levels when the stock goes up and it can't go up any further, that's considered resistant. A support is like the floor, so an area where it declines and consolidates and doesn't go any further, that's considered support. There's also intraday supports and intraday resistance areas where it can struggle throughout the day. What you want to do is look at it at the big picture first. So let's say we look at Apple. I would highly recommend charting it at 4 hour first, just to see how it goes. This is a beautiful chart, guys. This is what long-term traders love. Go like that or something like that. Like there's obviously a support right here in that level and that level right there. The stock continues to go up, but else is decline. And I'm gonna move this one this way. Like I've been trading for a while, and I have like lines that are here from years ago. They're kind of nice to just look back on and see if what you were talking about was correct. So there's obviously a channel that is falling right now, and it's on the bottom end of the channel. I mean, 385 is definitely likely. I just don't think it's going to be this week. Next week.
Thank
So
you.
essentially, if you follow that, you can make that line and follow it up because it's been following that line. So your low should be at where that line intersects.
Yeah.
Continually.
Stop loss. Stop loss. Should have a stop loss.
Or
I mean, by
always try to have
shouldn't
a
just
stop
pick
loss.
a cheap contract. No, you shouldn't. You should definitely not pick a cheap contract. If you're looking for cheap contracts, when I think of cheap, I think of less than $100. Then you're looking at companies that are not over $100. Like Ride Aid. Ride Aid is a stock that I would recommend. Those premiums are cheap. Bank of America, for instance, any stock that is not over $100
You can
share, then that's cheap, in my opinion.
That's where you want to start practicing to make money.
Thought spot was going up to $1. No one knows anything unless you can tell the future. Unless you can see the future, then no.
I'm working on it.
I meant picking strikes based on support and resistance. Why is that key? That's key because those are areas of supply and demand. Think about it this way: support and resistance are supply and demand. Areas of support are places where the price cannot go. You're as an options trader, you're playing in multiple directions, thinking the stock's going up, going down, and staying flat, neutral. You're playing against the other traders that are long term. They want to buy low, sell high. Know where my stop to be based on what the stock price is. Like for instance, like do you mean like if the price goes below a certain price, or where you want to capture profit? If let's say like you consistently want to earn only 20% on a contract, you could calculate that. You can calculate you can do it's a stop limit for having a if the price goes down goes below your price level, or you can also set a a sell limit where if the option goes above a certain percentage, and you can calculate that. It's very easy. You can then it'll automatically sell for you. But the issue with that is that like I don't do you on Robinhood, or are you on Thinkorswim, or are you on Webull? What are you on? Thinkorswim. Okay, so I don't have any contracts on Thinkorswim, so I can't really show you. And I don't really use Thinkorswim. I think Trix is best with that.
What do you use to trade?
I use Webull.
Okay.
Does Webull
On
have
Webull, on Webull I can show you how to do it on Webull on the app.
do it really quick? I've never seen the interface.
So are you, or you ask like when you're putting in a stop loss, how to put in the price, or you don't know what
Like
the
where?
when it drops?
Like where do you put it? Like where? How do you enter it? Probably.
How?
Mhm.
I think they know how. Do you know how to enter the stop? Because they, like I say, enter call when SPY is at 300. I want to stop. Oh, that kind of stop? I don't know. I just do a percentage on my contract. So like if I'm like, okay, this contract I'm willing to lose 10%, I'll do 10% of what I paid. But I don't know how to do it exactly to where if it hits the stock price actually hits a certain price, then it'll sell your contract. I know how to do that.
I mean, what I highly recommend also doing is that using ATR, which is the it's like an indicator that gives you your average trailing stop. I would highly recommend using that to help determine your where you should stop, because let's say you buy in at 300 and your stop is at $1 less, dude, the stock is going to fluctuate so heavily that that's going to automatically trigger soon. So one thing you could do to add a stop loss is using the ATR indicator, and that's through the TOS platform too. You can do that. I could show you on. I could probably show you on. We're gonna like show you on Webull. It's just like a regular order.
I think in Thinkorswim, when you're putting in your order, instead of a market buy or limit stop or market stop or whatever, or limit stop, it's in the same area as that. So you would find it there, and it should say trailing limit stop, I believe.
Oh yeah, yeah, that's right. That's right. So let's say you put a sell order. It's under order type. It's automatic to set for limit, but you can change it to market when the market's open. Stop limit, trail stop limit. I don't know what MOC and LOC is. Stop. So what you could do is what it does is that the ATR indicator gives you the average trailing stop. So let's say I can bring that study. It gives like a amount, and you just add that or subtract that from the current price. See if I can share my screen to show you. Okay, so I went to the edit studies. I added the ATR trailing stop. Hit okay. Then let me see where it shows. That work?
Stop and stop
No,
limit.
this
I think the only
is
difference
weird.
there is like the stop limit is you set a price that you want it to stop at, and then the stop or I don't know what the other stop would be actually. but he's
Okay,
showing.
so this is what it is.
should be in the-
ETR. So look at the 15 minute. You just take the math that's on here. Shit. Say you want up right here. Actually, what I would recommend doing is instead of using this indicator, which because it seems a little bit more complicated, just look at support and resistance levels. Use that as a stop loss. For instance, let's say you want to trade Rite Aid. The price is currently trading at 17.29, but obviously there's some consolidating in this flat area, so it's near a bottom. What I recommend doing is buying a stop loss for right here. Putting your stop loss right here. You can do that by right clicking. If you have a position sell, and what I would do is hit edit or change the order to stop limit. Then yeah, it'll automatically execute for you, and it's good for the day. If you want it for let's say you have shares, you can go and you want it to trigger after hours. You just have to put ETC, which is good till cancel _ EXT. EXT is the extended time. That's how you buy individual shares. That's how you buy shares when the market is closed as well too, because this thing trades on NASDAQ. It finds the best deal, and the only way to complete a sale when the market is closed is through NASDAQ, which is the automated one. So if you guys have never used the scanner is kind of helpful too. When I used to trade penny stocks, I would run the scanner, and that finds active plays. And just right click it into the anything spiked. Pre-market, have not gotten work. For options, it doesn't work. For individual shares, it works. Like it hasn't filled. It's on Thinkorswim or Scan. I would recommend playing around with these tools. There's a lot of very helpful information here. For the good till cancel extension, are you referring to yeah, I just changed the parameters of it. So I like volume. It needs to be over 100,000 minimum. The max, I think I keep it at max. And I like market cap. I changed market cap to 145 million. These are typically 45. I think it's like mid cap or small cap. I don't remember one of those. And it funnels through all of this. And just hit. I changed the thing to show 2,000. That's the max. And hit scan. It pulls up the most active. And I have for my columns, I like symbol, description of the company, mark, percent change, and volume. I don't really look at the rest honestly, but you could look at the rest because this gives you your ratio of call and puts. This is for options, by the way. Use it. Guys, you guys have any more good questions? Let's see. Exact scanner for potential momentum plays. Yeah, for potential momentum plays. Like what I like to do is like, for instance, if this is the top, I like to sort it by mark percent change. I go for the highest. I go there, bring up the chart to one of those. I like to see why it popped. Obviously, it's a biopharmaceutical company, so it probably popped because of a FDA reporting or something. But I go to news. I have news. Scroll through it real quick. What happened? Looks like they had an upgrade. Bunch of upgrades. That's the reason why it spiked. 48. Dang, that's a pretty big move. Who most likely would have missed that? Actually, you could have traded this. Honestly, you ran this after hours. You could have traded this. If you're on Thinkorswim, you would have bought that. But I mean, it just ended up the whole time. It's good and bad. And I stopped using it once I stopped doing pennies. I also look at price too. Like
Wait,
but I usually put price.
How can we stop doing penny?
Stopped doing pennies because it was, I don't know, I got into options. Into
Because
options.
pennies suck.
Pennies is like fast because you got a lot of like I encountered a lot of pump and dumps, which is cool if you're on the right side. But options trading, man, that's where the money's at. It's
I
higher
mean, like,
risk. I don't know. I just
there's
said why
just a
not go for the risk.
there's a different risk to reward to everything. So that's just kind of it. End of the day.
Yeah. If you guys like pennies, I can get back into pennies. Do you find really good opportunities here? Also, another place to find really good opportunities for pennies is let me see if I can bring that up. Finviz has a lot of freaking good opportunities.
Barchart.com also is amazing.
Chart, yeah. Oh, Finviz is like if you guys want like a platform that gives you pretty much everything on the homepage. This is the best one for you. Gives you certain signals. Like I sometimes once in a while when I'm bored and there's nothing else to look for, or the like earnings week sucks, I look for these things here. Some of them are some of them you can play options, some of them you can't. This thing just charts it for you. I'm pretty sure the bot that the unusual bot pulls the charts based on these things. This one's a good company if you guys like have money. Long term, JP Morgan Securities likes this one. Pennies in pre-market. Yeah, pennies make the most money pre-market, honestly, and like at 4 a.m. Pacific Standard Time. From 4 a.m. to like before market closes, that's the best time to make money on pennies. And another one is like if you guys want to just focus on specialize on biopharmaceutical companies, you can look up biopharma catalyst. That'll literally give you FDA meetings and stuff like that. I go to Catalyst calendars. I like FDA's. Click that. It'll literally bring it up for you. And yeah, gives you full description and everything. It gives you a freaking time of when that catalyst is gonna happen. There's no better way to freaking play these. If you like penny stocks and you like biopharmaceutical companies, or you just like biopharmaceutical companies in general, this is the website for you because there's no other resource that gives you a time like a date of when things are gonna happen. And then for spreads, we're gonna have Poke do that. I think Poke was gonna talk about spreads, so I'll have him do that right now.
Huge spreads. Who asked about it?
P Nguyen, P guy, PN guy.
Yeah. So about spreads. So I was gonna go over like credit and debit spreads just a little bit. They're really key for. I need to pull up Robinhood. Give me 1 second here. So they're really key for companies that have extreme premiums and you just can't afford to buy entry. With credit spreads, you are accredited. You are pretty much credited amount of money and trying to have the premium go to zero because you have to buy it back. The debit spread, try and have your spread go the farthest into the money, and you'll make the difference of the spread. So let's see if I can get my screen up correctly for once. So I'm looking at Amazon. So my screen got exited there. Can you guys hear me?
Depends on how you buy it, because if you buy the spread, like if you do what they do, which is a what they call the ghetto spread, where you buy each leg independently, and yes. But if you, let's say you buy it all in one go, then you have to close them together.
Well, you have to you buy them together. You purchase them together.
But the ghetto spread was like you buy one leg at a time.
I
You
can't.
can't do that. You have collateral.
Yeah. Can you guys see my screen? Okay. So, like, I was talking about Amazon here, for example, right? So everybody knows that premiums are super expensive. Try and click. My computer's lagging, dudes.
Not for David Bang.
Dude, I don't know why my internet's lagging so bad right now. Sorry, guys. Yeah. Okay. So let's say you want to buy contracts for Amazon, right? But closer into the money. You can purchase a spread. You can either get a debit spread, which is one of these, right?
Hey.
The
No,
debit
get out.
spread, this is the amount you pay. But the cool
That's not-
part is that's the most limited risk you can have. And you can actually get a certain amount back because you limit your risk on the bottom end. Pretty much what you want is for the stock to go upward. And the most potentially you can make difference between the strikes, which is 10. And so it's 10 times 100. So that's $1,000 that you can make, but you bought the contract for 370. So technically you can only make 630 out of that contract because you bought it in for that much. And then for a credit spread, you would buy a higher call and sell a bottom, so it's the inverse, and you'll be credited this amount, but you would want it to expire downward, right? And that's your max risk, and the same with the inverse. Any questions there?
Wait.
So I attempted a spread today and saw my P&O open. So I closed my profit. It was 1/3 of what my P showed on the spread. So what happened to your spread exactly? So I attempted to buy a spread today. Saw my P&L at the open, then I closed it at my profit and was like 1/3 of what the total P&L at the open showed my spread. Was it a credit or debit spread? Could you show the spread? Hmm. Did you lose a bunch of money on the P&L? Because the stock premium would have gone up. If you could take photos of it, we could explain it a lot easier. Just to see exactly what happened. Because it's kind of tough without seeing it, you know? If you can screenshot it or something. Like, your open entry and your closing entry. Oh yeah, it's on Thinkorswim. So ultimately, you lost money on the contract? Did the stock go down? What was the stock on? What was the stock though, ultimately? And there's all kinds of different spreads, like butterflies. There's inverted butterfly or open wing butterflies. Huh. You bought in at 700 and oh, because what happened? Did it go past your strikes? Wait, no. Even if it was to go past it, it was a debit spread. So if it did go past your strikes, unless the contract sold out for less, but that would make sense. How far out of the money? What were the strikes? Because ultimately, if it was too far out of the money and nobody was buying the contracts, that would have been the issue. But those are still $700 positions. What? That doesn't make sense. When exactly did you sell it? Well, to get credited, you have to be within the strikes, I believe. Like to actually make premium, because you have to have those contracts within those margins. Because like how you would look at a spread, it would look like kind of like a V. So like the closer you are to the middle of where that top end price point would be where you would make more money. So you lost money pulling out early, I believe. I think it's ultimately because you didn't close it within the spread limits
that you lost money, because when you have a spread, you have to have it closer to the top or end to make more money on the contract itself. So it wouldn't be worth as much. I think we're gonna wrap it up, but I'll follow up with you on that. I'm gonna call it a night tonight. Unless anybody had last minute seconds or something, questions or something. Peace, guys and girls.
Thanks, Poke. Thanks, CT.
Bye, guys. Thank you.
Bye.